All right, Money Morning Live, done with Kenny Glick and Scanman. We're going straight on in with Nick Black, talking about the crypto markets. I'm talking about AICI. Ready to get this rolling in 5, 4, 3, 2, 1.
Why do you whisper the one? What is the whisper? You don't want to alert somebody?
To be fair, what I was trying to do was time that properly so I didn't have that hard cut in sound. My timing, it's been crazy today, but I was whispering you sweet nothings, Nick. That's the truth, let's be honest.
You didn't whisper me nothing. You whispered everyone else a sweet nothing, and it wasn't a nothing, it was a one.
I love everybody in here, man. How you doing?
You just delivered more than the Fed has ever delivered, ever.
I'm winning then.
We're going to talk a little Fed today. I've got some interesting quotes, some fun stuff. First, we'll look at the markets. We had a couple of assets that we have in our data bucket that jacked up last night. That was kind of cool. It's fun to see a 50% night on an asset, but these things happen. You know what? We don't celebrate these ups either because we're still in an illiquid space with illiquid assets on illiquid exchanges traded by sketchy investors and run by sketchy individuals. And, it's early. It's early in the asset class. So a lot of people were hitting me up. Man, did I miss it? No, you didn't miss nothing because things are still so far down. But what you're getting is when you see these illiquid assets get a little cash behind them or, a couple of news articles or some piece of data, then they tend to react pretty violently to the upside. Why not violently to the downside? Well, most of the downside's been kind of suckled out of the market over the last, 11 and change months. We're almost a year from our all-time highs. Well, down from our all-time highs. And we're not anywhere near all-time lows. You know where we are? We're kind of floating around 2017 highs. So as long as you have a longer-term vision of what a new asset class is, and you don't confuse this for a tech play or a tech boom, because it's infuriating when I see people make that comparison and it's just flawed. It's flawed thought. They wrong. I'm not gonna say they dumb, but they wrong. Is there anything causing? Oh, that's a good question. Algorand is just oversold. A lot of these assets are oversold, and you get to a point where people say, I got to start adding. Algorand is going through some a lot of the protocols are always going through upgrade cycles, but right now, especially, you saw Ethereum with the merge, and maybe some of the myths that Ethereum was putting out there. People are starting to realize that maybe Ethereum 2.0 ain't no time soon. And so they're looking around and they're thinking, well, okay, Cardano, they came out with their Vassal upgrades and a lot of Cardano improvement proposals. That network is getting much more efficient and fast. Matic is signing deals every day. Cosmos is doing a lot of security upgrades. Cosmos may end up being the DeFi kind of hub for the world. But we don't know these things yet. We can only make, somewhat fundamental arguments, and they're only just arguments because they're all based on assumptions, and most of our assumptions are pretty weak. So just understand that this is more a beauty pageant. This is more assumption and less fundamentals because there are no fundamentals. There aren't even really good fundamentals in the equity space, although the traditional markets and financial advisors and every, talking idiot on CNBC would have you believe that there's all sorts of very clear data. But weird, isn't it, that data has never been sufficient for trading? Well, let me not say that. It's never been sufficient for investment. Trading, you're trading directly against humans in the short term. Trading, I look at kind of like poker. You're playing against the people, really playing against the people. Whereas investing for the long term, you're kind of playing with the people. You just want to be at the front of the line. Eric, does that make sense?
Yeah, I completely get what you're saying. Plus I like poker.
Are you good at poker?
I used to be back in the moneymaker days. Everyone Hold'em was huge and all the cool kids were playing. I understood the game. I went to Vegas and played a bit. It was fun. All not
Did you ever
cash
compete?
games.
Did you ever compete in a World Series of Poker?
No, but I did compete in Vegas in a tournament they had, and I got, I think it was top 5 or something. Made some good money
Dang,
there.
did you get money and rings and stuff?
I got money, but the next day I put into the next tournament, and guess who was the first person out? That was me.
Somebody named Eric?
Yeah, the next day. But hey,
Oh,
it was
man.
fun. I still was up when I left by quite a bit.
That's good. What's your best Vegas trip ever, like exit? Like up?
I
How
was
much did you
probably
walk with?
I was probably up $5,000 or something, and it was like $100 tournament, so it was pretty good.
And when was this? When was these? When were these
Oh,
$5,000
that was a
tokens?
long time ago. I haven't been to Vegas since, actually. That was probably 10 years ago, Nick. You know,
So you're saying that's when Bitcoin was about $800 a coin, $600 a coin?
was it that much 10 years ago?
10 years ago?
Yeah.
2013? Oh, probably $100, probably
Yeah.
$50.
Yeah.
So basically you had 100. Oh, you had it.
that would have
God.
been that would have been great. If only I knew
You
you
had
back
100
then.
Bitcoin worth of money.
Wish I knew you then, Nick.
Yeah, don't think of it that way.
I know.
You know
I know.
what? No, I wasn't buying Bitcoin back then either. I was telling my
Hmm.
brother he was stupid for
It was nuts.
mining Bitcoin. I'm like, what are those 2,000 Bitcoin ever going to do for you?
Now he's laughing.
He makes lightsabers or something. So he has he set up his own. I'm going to make lightsabers. I'm like, well, you can make whatever you want when you have 2,000 Bitcoin.
It's true.
So you can make them. Okay. Today we're going to do a quick market review. I will just touch upon those assets. We're going to talk about the Fed, and then we're going to hit your questions. So without further ado, should we look at markets?
We shall. Let's do it. What's happening? Or not much.
Still not much. This is part of the standouts. One, Matic. Everything, first of all, dropped for a few hours on the 75 basis points, but then there was a general sigh of relief. Oh yeah, only the 75 basis points that they had promised. So their signaling is holding true. Then in the statement, kind of a quasi pivot. They didn't walk it back too much in a press conference. Kind of a quasi, but none of this is new and unique. We've been talking about this in the heavyweights, especially. Eric, last week in Mexico, we were talking about the kind of the silliness of the Fed on the heavyweights.
Yeah.
But the greater story in the digital asset space is down for 11 months, and here we are. To you, what looks interesting? What looks like tasty if you were buying right now?
What would look I would want to get into the same thing that I wanted to get into when it was probably maybe not the better time, which are assets that I believe in that we're going to be going long term. So I'd want to get in some Ethereum, in some Bitcoin, Ethereum as well. And if I look at my investment list, I'd want to get into more of the things that I'm already in, because those are the ones that I believe in. So Bitcoin, Ethereum, Cardano, Matic, Polkadot, Cosmos, Algorand, and Fetch and AGIX. Those are the things that I really am watching on my list. So mine looks a little bit different than yours.
Delicious. All of those things make me feel good in my belly.
I'm glad I can make you feel good.
Let's talk about the standouts. And again, illiquid markets. So take this with a grain of less than a grain, a quarter grain of salt, if you would. Matic up 10%. And this is not, everybody's like, oh, when is it going to surge? When is not Matic specifically? Remember there was an article about there's going to be an Ethereum surge, a surge in the price of 10%. Bro, 10% ain't a surge. 10% is a Tuesday or a Thursday. Well,
Sure.
obviously that this isn't, Matic didn't surge. Matic is melting up and down and around, but you look at it over a year and we're down 53% ish. We're only recently kind of up and kind of, these are unloved assets, which is great if you're an investor. If you're not an investor, well, it doesn't really matter. If you're a trader, are there trades to be made in the space? Yes, but these markets are illiquid and you have to be very careful that you don't get into something that looks like a great trade and there's no way to exit. So I would be investing right now. However, if you get an asset that goes up 100 or 200%, well, then it starts to look a lot like a trade, because those are unsustainable increases based on the kind of very similar news that's out there. A couple of other standouts, Algorand, 10%, unloved asset. There's a deeper macro story here, but these are unloved assets, and these are institutional assets. Matic is an institution. As much as institutions exist, it's mostly hedgies right now, hedge funds. The institutions, the insties, they're not really here. They're being developed. Goldman Sachs, State Street, BNY Mellon. This is coming, but it's not here yet. They're not, catering to their institutional clients. So it'll get there, but right now, these are mainly core assets that hedge funds are kind of sitting on. So Algorand, it's unloved assets it's down 80%. So 10% in a day. Well, that's cool, but doesn't mean much. Flow, Dapper Labs. This, my guess, has more to do with again the news about Instagram really moving forward with their NFT services, which you'll be able to buy and sell NFTs through. I don't know if this is a good idea, but it's coming to Instagram. You'll be able to transact NFTs. Instagram will not charge fees. Meta will not charge fees. Apple Store or Android, whatever your device is, they have fees. So that's going to be a weirdness. Trading might make a lot more sense. And then there's going to be some back-end dealing and shenaniganery. But Dapper Labs is one of those that's going to have a wallet functionality on Instagram. So is Matic. So that's kind of nice. Filecoin, not a bad day for data. Up 12 and change percent. You might be looking at Arweave. That's in our data pile because we have the assumption fundamentally, we talked about this ad nauseum in the heavyweights, but Filecoin and Arweave, I think, have an important place in the future of distributed or somewhat distributed data and data protection. We don't want another Library of Alexandria event. So 52% day is not awful, but guess what? Still down 80%. So I think the highs of this thing, I saw highs on one of the other charts I was looking at, $92. So you say, oh man, have I missed it? No, you haven't missed it, because I don't think the highs are going to be the all-time highs. I think the current all-time highs, which represented last year's highs, represented a weird time where there was some extra money floating around and there was a bunch of dummies and they were banging on everything. They were throwing money everywhere it would stick and places it wouldn't stick. Most of those idiots are gone. Oh, they'll be back, but they're gone right now because they have to pay rent. And you know that because American savings are at a near 20-year low percentage-wise. People don't have savings. That's a whole other thing. All right. Graph token up a little bit. Still super cheap. Look at that, 289. What else was interesting? That's kind of it as far as like the big movers. I only watch LooksRare because I'm curious when this thing, significantly breaks. I think this thing goes. I think it goes away.
Away.
LooksRare goes. I think it goes away. Why would anyone hold that token?
It's not being staked anymore, right? Or it is, but there's not really any more.
They have staking and stuff, but I mean, no one's using the platform. Like no one. They went to feeless trades and all this kind of stuff. No one's using it.
Well, there's nothing. The whole market is kind of flat.
Yeah, man, it's kind of weak. I am following Mobix only because I got it for free. That's right, my favorite number for owning Fetch. I got a lot of free currency units for owning Fetch. I'm going to get a lot of free currency units for owning AGIX. I already got free Singularity DAO. I got free NewNet. Lots. And that's even after their whale fishing. So
I didn't get any free Fetch. Where are you getting free Fetch from?
I didn't get free Fetch for owning Fetch.
No, you got free. What do you have down below?
MetalX and Mobix, and then another one. I sold them all pretty much all.
Is that from being staked on the Cosmos?
It was pre-Cosmos. It was before they switched over.
Oh, okay. All right, I feel less left out now. Cool.
But they're going to start initiating those programs again, so that'll be kind of cool.
Very nice.
Okay, but otherwise in the market, still nothing to see here. Great that things are green, but doesn't matter. They're not green in an important way. They don't signify a sea change or shift in thinking because people are still mostly macro focused. Okay, in the chat, let me know. Do you believe that the raising or lowering of interest rates has an actual, and there's no right answer, that the raising or lowering of interest rates by the Fed is a way to control business cycles, recession? So, matter of fact, if it's a way to control anything at all other than psychology, put it in the chat. I would love to see. And again, there's no right or wrong answer. Never mind the data. We're going to look at a couple of very interesting quotes. Zulu, man. Okay, so let's have some fun. Are we ready to look at some really cool quotes?
Yes.
Okay, so let's start with number one. Eric.
Wait,
Okay.
Yeah.
I want you to read.
No, come on, Nick.
Yeah.
I didn't pre-read this or anything. Okay.
Nope.
I didn't even know this was coming.
They didn't pre-think it. They just said it.
Jesus, thanks. There are many in-groups in this world, each with its own set of private jokes. In the monetary in-group, which just might have the prosperity for us all at stake, the biggest yak in town is the nation's central bank, the Federal Reserve System. That was confusing to read at that. I assume you want me to keep going.
Carry on.
Okay, banks are laughing at it. Economists are laughing at it. Businessmen getting loans like crazy are probably laughing at it. Congressmen are not in the in-group. They are just frustrated and puzzled by it. Edwin Dale, The New York Times. Why do you like this so much, Nick?
I like it because this was the psychology. You could read this right now and go, man, this guy's nailing it. Okay, let me hit number two. So I think you're going to like it. Number two.
A lot of reading.
Okay, ready? Go.
You totally set me up today, Nick. All right, the joke number two.
Those are quotes, by the way. That's quotes.
Oh, those are quotes. Okay.
Yeah.
The Federal Reserve, it often seems, hurls thunderbolts and nothing happens. It raises the discount rate and it furiously buys and sells treasury bills. It watches. I'm watching your face just be in joy as I read this. It watches so much arcane things as the federal funds rate, and net borrowed reserves, and the bank credit proxy. It tells the world solemnly that, by golly, it means business is stopping inflation. Edwin Dale, The New York Times.
Yes. You're like, man, this guy's nailing it. Does anyone want to know when this was written? Eric, give me a guess. When do you think this was written? Because it sounds pretty
1970, 79. Good year. It was a good year.
69.
Oh, I was only off by 10.
Do you know why the 69? That's very interesting. He's calling the Fed out for being a joke. This is what everyone thought. Everyone. And then in the late 80s and 90s, they weren't saying this so much. And then in the late 90s and the 2000s, the aughts, all of a sudden the story changed. And the bank that's not a central bank was lauded for their behavior during the Volcker era. Does anyone know who Paul Volcker is? He's a hero. The dude was tall. You want to know how tall this guy was? Eric.
Yes.
How tall do you think Paul Volcker was?
Paul Volcker. He was 6'8".
He was like 6'7".
I'm very close with all of my guesses today.
He was so tall.
Oh,
okay. Next one. Ready? This is the Volcker myth, and begin.
Vice Chairman Solomon. I don't think it's likely that we're going to have that kind of gradual change. I think it's more likely that after a protracted period of these high real interest rate levels, I'm sorry, I'm stuttering over my words. We will see a significant recession both here and abroad. I don't know whether that'll be in 6 months, 9 months, or a year. But at some point, I think we will see a significant recession. Inflationary expectations will get lowered, and interest rates, both nominal and real, will come down. But I don't know if I have any alternative to the policy that we're following. Federal Reserve FOMC meeting, July 1981. Oh, that was right around my 2-year birthday.
Okay, so this was before the myth. This is the Fed. This is their meeting, their minutes. This is the Fed telling you we don't know what's happening. However, we think right now, this is before the myth was spread in the 90s and the aughts, and everybody said, oh, the Fed knows how to wrestle inflation. This is the Fed saying to each other, we don't know what the truck is going on. We got no clue. However, and this is This is in diametric opposition to what's happening right now. This is the Fed during the time when they were the most effective, saying they didn't know what was happening. They have no clue what was happening. They don't have any other weapons. So why not? And so why not doesn't seem like policy. Monetary policy is not monetary. It's kind of monopsychopology, monetary psychological policy. There's no money in their policy because they don't trade money. They don't move money. They've never touched money. They don't even know what money, they can't even define money. But it was very interesting, a couple of specific statements. One, I think it's more likely that after a protracted period of high real interest rate levels, what are they doing right now? Raising interest rate levels. We see a significant recession, both here and abroad. Oh, that's weird. Because aren't they trying to raise interest rates to fight off inflation? Oh, that's weird. So exactly the opposite of what they're doing now. Got it. Okay, cool. But at some point, I think we'll see a significant recession. Again, significant recession. But I thought there was going to be no more recessions. I thought that was what Janet Yellen just said a few years ago. No, we'll never see another recession. Oh, that's weird. Oh, that's cool. She's no longer working at the Fed. Oh, that's right, because she's in the Treasury. Oh, that's weird. So it's like the Fed is at the Treasury and the Fed. Huh. That's interesting. That everything they thought in the 80s, they just whitewashed it, painted over it. It doesn't make any sense. But I don't know if we have any alternative to the policy that we're following. Well, that part is still true. So be very careful. Moving bank reserves around is a bank function, and the basic idea is this in their non-monetary policy. The basic idea, this is what they thought back then, is that if we restrict bank reserves, because banks that work with the Fed have to have certain bank reserves to meet Fed standards. See, this doesn't apply to all banks. This is just a handful of banks. But if they're in the Fed system, they have to have a certain amount of bank reserves to meet the standards, the regulatory standards. So the Fed thought, well, if we restrict the reserves, if we lower the reserve or raise the reserve requirements, then the banks will go out into the market and do that bidding. What somehow happened is that people confused swapping of bank reserves, which is just a balance sheet machination that has nothing to do with the real world or money. Somehow that got confused for bank reserves equal money. Bank reserves are not money. Again, this is a structural regulatory swap between banks in the Fed system and the Fed. Who turns money into society are banks. And when the banks don't do it in the United States, banks outside the United States do it. And that is the Eurodollar system, not to be confused with the Eurozone currencies. Now, if you want to dig more into this, and again, you got to be a super nerd. I'm a super nerd. You would want to go listen to Jeff Snyder and Emil Kalinowski. They do a lot of work specifically on this, especially Jeff. For those of you that don't want to uber nerd it, it's easy. You can back it out. If the Fed moves around non-money, then it ain't monetary policy. Cool. So what is the effect? It's psychological policy. If idiots, what would dummies do, right? If idiots believe that the Fed has control over money, then the idea is, this is what the Fed hopes, is that the average person, the average financial manager, advisor, FAs, whatever, will behave as if the Fed did do money, as if they were a money dealer. So if you believe that the Fed printed all this money, which again, they admitted they didn't, and if you believe in the myth, which again, the Fed, the Federal Reserve already told you it's a myth and that they have no clue what's going on and that they never have. And again, in 1995, when Alan Greenspan had the irrational exuberance speech, go read it if you're curious. Go read the speech. It ain't about the internet, bro. It's about their inability to define money. They were grappling with problems, not us. At least Greenspan was marginally honest about it. So when you back all that out and realize this is psychological policy, you have to say, okay, how powerful is it? Well, it's becoming more muted because if the Federal Reserve doesn't deal money, but other central banks do, and other central banks behave around Fed policy, then you can have drastic monetary effects and recessionary effects in the real economy, globally and locally. So you need to be very careful about how much you buy in. And this is why, when in doubt, just go to the bond market. Go to the bond market. So, and happy there. I go on so much. You don't, let's see, I think you don't care for the Fed. No, I don't care for the Fed because it's not a banking system. The Fed is political satire. And that's the problem. Because I hear people, even somewhat smart people, even educated, you think, people, go on about how much interest rates matter. And they're propagating the myth that the Fed over and over has told you is a myth. And so I think it's problematic when we propagate that myth. I like that. Wile E. Coyote, the open mouth committee. Well done. You just won the internet. So I urge you to be careful, especially lately, where you're going to hear a lot of kind of overwhelming post-Fed. They're going to look through the minutes. They're going to read the words. Jeff Snyder, Daddy-O, it's Jeff Snyder. He was head of global research at Alhambra Investments. I think he's with Stephen Van Meter's firm right now. And I have no thoughts on CRO token, none, period, because if that's the token that's related to crypto.com is a scammy network. It's a bunch of scammy individuals. There's way too many Russians involved. It violates every one of the rules, and I've seen them pull shenanigans. So I would just stay away. Stay away, stay away, stay away. Doge is a dummy coin. Stay away. Shiba is a dummy coin. Stay away. Now, I will say this. Elon Musk, for whatever, he seems to love the Doge. So again, what would dummies do? If dummies buy Doge because Elon, because Twitter, because this, because that, maybe it's a trade. Is it an investment? Not yet. Could it be an investment in the future? Who knows? Maybe if the whole world changes, but unlikely. On that note, we'll see you tomorrow, heavyweights. We will lift the skirt of a lot of this. I have a couple of new coins we're probably going to be looking at much more seriously. I've hinted around the edges, but we will kind of dive into that, kind of expanding the Matic ecosystem as far as layer 2-age. Anyway, that being said, stay in school. Don't do drugs. Don't do anything. My poor insolvent drunk, strung on a meth grandmother, or Paul Volcker, or Edwin Dale, or Eric, or Brandon, or Jerome Powell, or Janet Yellen, or Nancy Pelosi. Wouldn't do, which is very little. And I bid you a pew pew. Pew pew.